Anyone can give up. It's the easiest thing in the world to do, but to hold it together when everyone else would understand if you fell apart. That is true strength. Miyamoto Musashi. That is a very good quote for today when we see things just hammering down, both in the S&P 500, in the NASDAQ 100, and down some in gold. The only thing up for the day on our charts, as one would hope, is bonds. Not up a lot, but up. We see stocks way down, the S&P 500 down 3.40%. The NASDAQ 100 is represented by QQQ down 5.07%. We knew this day was coming when we'd have the start of some down moves. And I tell you, it started strong, did it not? But let's take a look at what's going on. Now, one way we can see immediately the strong down move is how our price percent oscillator, which was rocketing up, has bent over. That, of course, means a loss in upward movement. We also see where the derivative oscillator has lost a little bit of energy. Now, this is on our weekly chart. We have a long wick on the top. Still have an okay green box. It's higher than the prior week. And, of course, the high prior to this was higher, but we can see where things are losing momentum. Go to that 2-day chart, and that's when you get to the smaller charts where you start really seeing things. Our intermediate chart shows the price percent oscillator dropping over. Now remember, we completed the last full 2-day candle on Wednesday, so this is just Thursday's candle. It goes from strong up movement, as we were talking about yesterday, 8 days of just marching up like stair steps, and then bam, we have a red, almost a doji, sitting right there on the 2-day trend line. We have the price percent oscillator heading down. We have the derivative oscillator just dropping momentum quickly. And here's where we see the blood. That is in the half-day chart, blowing through that trend line for the half-day chart, blowing right through it in the morning. And we see where things tapped down, pushing through the 2-day trend line. So it blew through in the morning, the half-day. Then in the afternoon, blew through the 2-day. Lots of strong down movement, and look at that crossing over. Happened first thing in the morning and continued accelerating in the afternoon. So again, we can see lots and lots of downward pressure coming to bear. Hasn't crossed over going down yet. Don't know that it's going to on that 2-day chart, but it is sitting right there at the trend line. Depending on how things open in the market on Friday, we'll see if things are going to slow down in that down movement and peter out, or if it's going to continue hammering down. Again, the afternoon showed us more hammering down. So if you decided and you were in this latest 2-day crossover that, of course, started back on the 3rd of August, you have done quite well. If you decided to pull it in the morning, and again, we talk about when you should check the market when you're in the market, and of course that's twice a day, after idiot hour in the morning when things settle out, and then in the afternoon. Hopefully you saw that in the morning. Perhaps you made a decision to pull your trade at that time with the blow through. Maybe you held on and are seeing how things are going to potentially level out. You don't have a crossover yet on that 2-day. Now, if that ends the day on Friday, crossing over going down, then of course that means we are not in a trade. You don't have to wait that long, but always something to keep in mind. Now, let's go on to the Qs, down the most for the day. What do we see there? Still a green candle, higher than the prior week's higher high, but the candle body itself still up there. We can see where the price percent oscillator is about flat. Derivative oscillator has lost some momentum. Excuse me. Instead of a doji, we have a red spinning top pushing through the 2-day trend line. Of course, blew through the 4-hour. It goes without saying, and we can see that price is well above the weekly trend line, but again, hammering down. Remember, our jumping in point somewhere around the 278.60 mark. And again, where we're looking right now is we can see we've pierced the 2-day, not pierced the weekly yet, but that price percent oscillator heading down, so we'll keep an eye on that. Half-day chart blew through in the morning and then further down in the afternoon, pierced the 2-day, hadn't hit the weekly yet, but again blew through it in the afternoon after blowing through the half-day in the morning. So look at that acceleration down in the derivative oscillator and the price percent oscillator. So keep your eye on things. You can pull those trades. You have done well. Even if you lost some of that up movement, you still have done quite well in it. So watch it, learn from it, practice it, and we'll see how things continue on Friday. There may be some big decisions to make in the morning or at least in the afternoon. We'll see how much of this hemorrhaging continues or if it levels off. Now let's move on to bonds. Up for the day, 0.28%. And of course, bonds, we had that 2-day recross. Bonds are still heading down on the price percent oscillator, just barely flattening out a little bit. Derivative oscillator gaining downward momentum. We have a solid green spinning top. Now remember, that's not an open box candle. It means a slowdown in the down movement. Have not hit the lows we did last week. Price is below the weekly, but sitting right there up close to it. Go to the 2-day. Of course, we had 4 days of good down movement. Two-day candles. Yes, 4 days of down movement, 6 days of sideways upward pressure, then 2 days of down movement, and then over the course of this day, blowing up through the 2-day trend line in the morning, which is very important, and then on up through the weekly in the afternoon. So many of you had gotten yourselves out after that initial 4-day drop. And of course, we had that other 4-day drop. Now that does appear to be over. We'll continue to see how that moves along. That price percent oscillator is heading up, derivative oscillator losing downward momentum. And of course, we look at the half-day chart. Let me use the right terminology now that we're using the 195-minute candle. And we can see, of course, where things bottomed out all the way back on Friday afternoon of this past week, the 28th of August, and then sliding sideways and up since then, and of course accelerating over the last 2.5 days up. Now, one thing important, hit its high in the morning and then slid over into the afternoon. You can see where the price percent oscillator lost a little bit of momentum, derivative oscillator heading up. So again, we'll continue to keep our eye on things, watching in particular as we talked about the 2-day and what the weekly is up to. Now again, haven't pushed through that weekly trend line yet. That is important, but have blown out that 2-day. So keep your eye on the prize. Lastly, we go to gold. Down for the day, 0.81%. We do see where, and we've been talking about this here for a couple of weeks at least, going into maybe the 4th week now, after gold peaked all the way back on the 7th of August, we've seen a devolution in the price movement in gold. It was, 3 weeks of strong up movement. And then we had a slowdown in gold. And what we see so far this week, we have a solid green space, pretty much a doji. Price percent oscillator heading down, derivative oscillator continuing to lose momentum, getting close. Will we have a crossover by the end of the day on Friday on gold? I don't think so, unless tomorrow's just a super strong down day. Today wasn't a super strong down day. It was down 0.81%, nothing like the S&P, nothing like the NASDAQ 100. We go to the 2-day chart. It's been negative for a while. And of course, we're waiting to see if this negativity is going to pull the weekly over, give us a weekly vertical crossover. Earlier, we were hoping, of course, with some of this up movement that we might see a crossover going up. Well, That does not look like it's happening right now. Price percent oscillator headed down. Derivative oscillator losing downward momentum though. And of course, we can see over the last 2 days where we've had this down movement in gold. Did cross over going down on the half-day chart in the morning on Thursday. So lots of interesting things to watch on Friday. And of course, we will bring you the comprehensive review and forecast at the end of the day. But do pay attention if you're in that practice trade on the S&P 500. Start really making up your mind if you are still in it as to what you're going to do. Pay attention to the market in the morning after idiot hour around the 10:30, 11 o'clock, and then check it again in the afternoon to make your calls on what to do. If you see a slowdown in this down movement, that's great. If you don't, you see things accelerating, then of course, this is what it's all about. This is what Miyamoto Musashi tells us. You have to think about these things deeply, and it's all about practice. And you're going to perform the way you practice. So put into effect those things that you have learned. Being here with us every day, watching these markets as they move back and forth. And it has been very, very, very good to us. So good to us over the course of this summer, unlike anything we have seen before, where the market just has rocketed up, something like you might see in the fall-winter trading zone. So now as adjustments come in, pay attention to those and act in a smart manner. My friends, God bless. All the best from the whole team at Charting Wealth World Headquarters. You don't have our book, Charting Your Way to Wealth, second edition. It is available. Thank you, Patreon members, for all of your support. If you're not a Patreon member and want to join, lots of great benefits. Our 3-part options, Made Easy, the Charting Wealth Way, along with our monthly question and answer live call-in session. We finished it yesterday. And of course, I emailed a video version of that out to all our members, those who attended and those that were not able to. So if you join, we'll make sure to get that to you also. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.